friends, and welcome to the CUInsight Network. I'm Robbie Young, Vice President of Strategic Growth at CUInsight, and on this show, I have conversations with thought leaders who support the credit union community. We'll identify issues affecting credit unions and discuss best practices so that we can all learn and improve. My guest on today's show is Stuart Bain, Senior Vice President of Product Management at Alacriti. Stuart, thanks so much for being here.
Nice to be here, Robbie.
So I'm going to go ahead and jump right in with the first question. Most of us didn't grow up thinking we would get to work with credit unions. What did you grow up wanting to be?
Well, it's interesting. My paternal grandfather worked in the UK term would be a scrapyard. I guess you'd call it a breaker's yard. And I used to go and sit with him and watch what he did. And I was fascinated by that as a child. The machine that picked the cars up and put them in the crusher and how they turned them into parts and so on. So my goal as a child was I actually wanted to own my own breaker's yard. That was all I wanted to do, was all I would talk about. So slightly different career trajectory from that.
That's so exciting. And it sounds like the ultimate boy dream.
Yeah.
What was the journey like to your current role as Senior Vice President of Product Management at Alacriti?
It was, best way of describing it, if it was one word, would be unconventional. So I left university in the UK, you can tell from my accent, with a degree in geology, geological sciences, and wasn't actually sure what I wanted to do with my life. So I ended up taking a staff level job at HSBC in the UK, which is a bank, and spent some time basically perfecting mortgage securities. So checking title deeds, life insurance, buildings insurance. At some point, they had everybody do an IT aptitude test, and I scored the highest that they'd ever seen. And I had no idea that I was good at that type of logical thinking, critical thinking type skills. So I then took on different roles in IT, switched to business banking operations, and then switched back to IT and earned a second degree in financial services, and just gradually worked my way up from a staff level member of staff. Ultimately, I was asked if I wanted to work on a payments-related project in the United States, working with Yahoo. It would have been foolish to say no to that, so I ended up moving here probably about 20 years ago to work on that project. I decided to stay in the US. The bank fortunately sponsored us for green cards. And after 15 years of being with HSBC, I was offered the opportunity by Alacriti to essentially finalize the build of OrbiPay, the initial EBPP product, which we sell as loan payments, and take it to market and launch it. And I was ready for a change. I wanted to work for a smaller company, so I jumped at the chance.
Wow, what a really exciting journey. Could you tell me a little bit more about Alacriti and where and how you all add value to credit unions?
Alacriti is a leader in payment modernization. We have over 20 years experience as a fintech, and we focus exclusively on payments and payment processing. And that fintech focus is borne out by our staff, which is 3 out of 4 employees are actually developers. So we're actually dedicated to building innovative solutions for financial institutions. So the overall unified money movement platform includes the EBPP product, which serves both loan payments, insurance premium payments. Basically, it's a bill of direct solution, as well as things like external account-to-account transfers, digital disbursements, account funding. We also have a payment hub that supports all of the major networks, Clearinghouse RTP, FedNow, FedWire, ACH is coming in Q2 this year. We actually helped the Federal Reserve launch the FedNow service. We were one of the test bed systems that they used for their pre-live and post-live checks, as well as doing extensive UAT with us. Today, we process around 60 million payments annually worth over $100 billion, and we serve about 85 million end users. As part of that, we count, if you look at membership numbers, about 20% of the US credit unions make use of our services. And our mission is really to help those institutions modernize and simplify their payments, replace disparate legacy solutions with a single unified solution for their members and or customers if they're a community bank.
That's so interesting in how you make those things all work together to support credit unions. Providing an exceptional member experience is a focus for credit unions. The loan payment process can certainly impact that overall experience. So could you share how Alacriti can support credit unions that may be struggling with outdated loan payment systems that hinder member satisfaction and fail to meet those modern expectations for convenience?
I guess I'll call them legacy solutions. They cause issues and pain points and increased costs across the entire loan payment process and life cycle. So we're talking about things like increased calls to the call center, tying up CSR time due to the lack of simple self-service options. Increased staff costs due to having to support manual processes, receiving a file, having to manually upload it, or even in some cases, manually process those payments into the core. A lack of real-time connectivity, meaning you've got out-of-date billing data and delays in posting payments. I think what we've seen, if you look, there was a payments article came out a few days ago, talks about instant gratification. And that's the expectation these days. If it's going to take 2-3 days to post my payment to my loan, that's no good to me. I need the payment to be there now. And people will walk with their feet. They'll pay their loan off and be like, no, I'm not taking out another loan with that institution because it just was an unsatisfying experience. And you end up basically with a dissatisfied member base due to all of the above. So the EBP loan payment solution addresses that with the real-time integration, the extensive self-service options, including those outside of online banking. There's a core cadre of members that don't want a login ID and password. They want to go somewhere each month and just make a payment. They want to get a statement and make a payment. Those people do exist, and you'll never be able to persuade them to sign up for something. And everything's automated, including the returns of handling and things like that. So all of those manual processes, the calls to the call center all go away, and everything's done in real time. So you have a complete solution that mimics how customers and members make payments in the real world. Some guy I talked to uses the example of ordering a pizza from Domino's, and you can see exactly where it is in its life cycle as it's being delivered to you, and payments really needs to get to that type of status.
I have heard that Domino's feature mentioned a lot in the way we work with fintechs and how credit unions work with organizations to really drive that member experience. So that's interesting that you mentioned it too. Shifting a bit from the member-facing experience to employee experience, how do you see improvements in the back office of credit unions having a big impact on loan payment process and lifecycle?
So I think all too often when people think about improving their payments, they focus almost tunnel vision on improving the self-service options. And the folks in the back office are sort of given short shrift, and people don't really think about them. They're just there. They just do what they need to do. However, we also believe that improving the back office can also have as big an impact on the loan payment process and life cycle as improvements in self-service. Two examples. So we offer a service called CSR notifications. So what that is, it's a proactive communication that can be sent out to drive engagement. So one credit union implemented this, and basically what it is, it's a reminder of bills that are coming due, and it contains an actionable link that the member can use to immediately make a payment without needing to know any of their credentials. So it can remind them about upcoming payment deadlines. We have one client uses it for sending notices out that appraisal fees are due. So these are beyond just simple loan payments. We're talking about any type of payment that the credit union wants to capture from their members. So by providing these actionable messages, and that's the key thing, there is a link in the email or the text message that can be clicked on that will take the member to a payment page without needing to authenticate. They actually reduced the volume of their inbound calls by 30% and saw an actual measurable improvement in on-time payments because they were doing outreach with something that was really easy to use and make a payment on. And it's back to that guest channel that I talked about earlier. So this type of proactive communication, or sending out stuff after if they're delinquent a couple of days to encourage them to make payment, allows the members to stay informed and empowered to actually take immediate action. And it fosters trust and engagement with the credit union. Hey, we're reaching out to remind you with a personalized message. You need to make a payment, or you need to call us, that type of thing. So that's one part of it, is improving that part of the engagement process. The other one, as I mentioned earlier, is the whole back office payment handling, and it's streamlining internal operations. So one of our credit union clients used the real-time integration and the enhanced back office capabilities to basically manage account servicing and collections a lot more efficiently. They were doing very manual processes, having to load billing data to a legacy solution, load payments back in. There were 2 to 3 days in delays. There was no real update to the member about the status of the payment. So they were having to field calls saying, hey, is my payment posted to my loan yet? So by automating all of that, they decreased their payment processing times by 40%. And those staff were then freed to focus on more strategic member services like analysis and cross-sells. So this sort of transformation improved their internal workflows, resulted in faster resolution times for members because they could see exactly that their payment had posted. And again, boosted overall satisfaction, but not just for the members of staff that are actually working on the payment process.
That's such great insights on how those things connect together. So one topic that I'm particularly interested to hear more about is Alacrity's pay by text offering. Can you share what that is and how it can benefit members and credit unions?
So pay by text, it sits in the space between the two classic payment types that billers offer, which is I get a paper bill, it has a due date on it, and I go in to make a payment and I have to do all this work myself manually to make a payment each month. So sign in, enter the payment, get the confirmation done, but I have to do that every single month versus signing up for fully automated payments. So I sign in once, agree to do recurring or auto pay, and then my payments are processed automatically without reference to me as the individual that set that up. So our pay by text solution offers a third way of making payments by allowing the member to reply to due date alerts to approve payments. So it makes use of a payment authorization called a standing authorization, which is a NACHA rules-based thing, which is basically a pre-approval of payments for a billed amount at a future date from a designated payment method that have to be approved before they can be processed. But the approval process is basically saying yes. So this gives their members the third option between one-time and fully automated payments, which to enhance their satisfaction. So a credit union just introduced this, and the way it works is the member signs up, they create the standing authorization, and then we send them alerts to remind them on their due date that their payment's due, and they can just make the payment by replying to that message, pay loan. So this became a game changer for their younger members. So they saw a 25% increase in payment completion rates. And the simplicity of it's really easy to understand. There's no complexity. It's almost set and forget. But it gives the members a measure of comfort that we're not just going to take money from them. So if they're short of money one month, they can just choose to ignore the alert and ask a friend to make a payment for them, for example. So this simplicity removed friction from the process and actually positioned them as a leader in delivering modern mobile-friendly solutions. So this whole, the more options you offer, the more likely your members are to pay you electronically, rather than getting in that mindset of, well, they have to sign in and they have to make a payment through online banking.
I can definitely see how reducing that friction and making it so accessible and quick is really a bonus for the credit unions you work with. As we look to the future, what is Alacrity's focus on the road ahead?
I'm slightly going to speak from my perspective because it's what I'm interested in. I think there's two key things that we're going to see to start to arise. And this year, I think we'll start to see the first of these become increasingly prevalent. And that is the request for payment model using RTP and FedNow. So if you're not familiar with that, what that is that two-step process where you create a payment and then a request for payment sent to your bank, and you have to go to your bank and approve that transaction. Request for pay is not an instant ACH debit. There's always that second step. And that second step is key because what that does is make the transaction irrevocable and good funds. You get the money in real time and the customer can't say they didn't approve the transaction. It sort of combines bank account ownership verification and the instant payments into one sort of combined solution, which is basically if you approve the message, we know you own the bank account and we know you're good for the money. So our take is that we think this is going to open up new types of payment processes and models beyond just, you see pay by bank used a lot, which is essentially a merchant sends a request so you can buy something. I think it's going to be a bit more transformative than that. For example, myself and one of my colleagues, Mark, did a webinar on this a few months ago. Simple things like, I want to purchase a car, I've got pre-approved loan, at my credit union for $20,000. But I don't know the purchase price of a car. I haven't chosen one. So I go to the dealer and I'm on a Saturday and I want to buy the car, but I don't know what it's going to cost, so I can't get a cashier's check. When Request for Pay is in place, I can go to the dealership, say I'm pre-approved, choose the car, and if it comes down to $17,968.28 I need to pay, the dealership can send a Request for Pay to my credit union. I can approve it on my phone by drawing against the loan proceeds, and the dealership knows I'm good for the money. I don't have to wait for the credit union to open to get a cashier's check. I don't have to carry cash around with me. And it's that type of alternate payment models that we think are going to be transformative and replacing where we still see checks in play. For example, mortgage drawdowns is the other classic example. And we see a lot of fraud that, ironically, check fraud's actually on the rise, believe it or not, even though the usage of checks has dropped. And we think Request for Pay is actually going to start to tackle that by making the process truly electronic and truly secure on both sides. The second thing we see is probably as instant payments become the norm, especially send, we believe that the fraud and risk management tools are going to need to be updated to better cope with that 24/7 instant gratification. And rapid responses are truly going to be required, more accurate decisioning. Now, people are going to say, well, AI, that's the thing, that'll take care of all of that. I have a slightly different view. I don't know how much of a role AI will truly play in that. I think there's going to be a lot of data mining that's done, but people are going to have to shift their mindset between the fact of, well, somebody's done a bill payment, we can wait until end of day to work out whether to approve it or not. These things have to be moved to be much more real time. As an adjunct to that, we're actually seeing more interest from our clients in more dynamic payment limits, more member and account-based limits rather than just you could make a payment of $5,000 every week. And I think we're going to start to see risk scoring even for more mundane type of payments like my regular ACH-funded credit card payment to truly better manage risk and actually be able to focus in on the members that are up to no good versus the members that are just happily paying and are no trouble at all. You end up with a situation, it's sometimes difficult to see the wood for the trees simply because everything gets checked and you can't tell what a false flag and what a true issue is to investigate.
Well, that road ahead looks very busy, but also really exciting. To wrap up the show, I'd like to have some fun with some rapid fire questions to let our listeners really get to know you better. The questions are rapid, but of course your answers don't have to be. Do you think you're ready for this?
Sure, shoot away.
So, who is someone in your life that was a great leader and what really made them great to you?
So I'm going to say a gentleman called Daniel Eckert. I worked with him at HSBC where we developed a product called OptiPay, which is worryingly close to the product I own now called OrbiPay, but it was actually the first decoupled debit card that was issued in the US. If you're not familiar with what one of those was, basically it was a debit card that was tied to any bank. So it was issued by a bank, but you could use any bank to fund it and used ACH to process the transactions. So you could issue a card, gain the interchange, but your customer didn't have to open up a bank account with you because we could link to any account in the US. We did a lot of innovative stuff there. I have 2 patents from the time from working with him. And he showed me the benefits of persistence in the face of, best word is obstruction. This was so out there that everybody said it couldn't be done. It was not possible. Every possible obstacle was thrown in our way before we launched the card. And we actually did launch. We launched with CVS. We launched with Quick Trip. And the product was a success. And then the Durbin Act basically wrecked it for us. He also showed me how to clearly communicate a complex idea simply and cleanly so you could actually get buy-in from people, again, to deal with that persistence in the face of obstruction.
If you're going to splurge on something and want to treat yourself, what's one thing that you might invest in a bit?
So, given the sort of software-focused nature of my job, I have an abiding interest in tangible physical things, hardware, mechanical things. One of my major hobbies is actually working on my house and building things with my hands. So, if I was going to splurge, it would be on something mechanical like a watch or an older car. I don't really have an affinity with modern cars with all the computers. So my splurge would probably be an older classic car, depending on how much money I was going to spend. With a preference for British, given my accent, say something like a Jensen Interceptor or an older Lotus or a Caterham.
That's interesting. The Stuart I know closely also would probably splurge on something like that too, but it would be old Triumph motorcycles.
Yes.
So, a random question. If you're traveling for work, what city are you most excited to visit, whether it's going to a client visit or going to a conference?
I'm going to have to go with Nashville. It basically has a life to it, unlike anywhere I've ever been. It probably rivals even New York City, Times Square, in terms of the hustle and bustle that goes on, especially on the Miracle Mile. And I've been there several times. It seems to have become one of the de facto places for things like the NACHA conference and the AFP conference for the last few years. And also, freshly made Hattie B's Nashville hot chicken is to absolutely die for if you like spicy food, which I do.
You know, I don't love spicy food, but I know that's good. What's one book that you think everyone should read?
I'm going to go for something a bit non-traditional here. I read this probably 9 months ago, and it's called Business Adventures, 12 Classic Tales from the World of Wall Street by a gentleman called John Brooks. Now, it's an older book, but essentially it's a history, and it focuses on historical misdeeds and scandals on Wall Street. And it's telling about how many of those have parallels with some of the shenanigans that go on today. And it's just genuinely a fascinating read about how history has a slightly irritating tendency to repeat itself. Some of it's quite old, some of the tales are perhaps a bit dated, but it's just fascinating to get the insight into how things worked pre-computer, pre-electronic communications, but how they have interesting parallels with what we see go on today.
We'll be sure to link to that in the show notes so that our listeners can take a look at that. What has been the best hack for creating balance and integration between your work life and your life?
I've been asked this question a few times over the years, and my answer has always been the same: separate cell phones. You have a cell phone for work with nothing personal on it, and you have a cell phone for personal with nothing work on it. So you can focus. And you can put your work phone down and pick up your personal phone, and you're not being pinged about work on your personal phone. And I've done that for years. I've got 2 cell phones on my desk right now. And that's what works for me, because I know I'm not going to be picking up my phone and seeing, oh, there's a text message coming, it's work related. I can actually shut that down just by leaving the phone somewhere, but my family and friends could still reach me.
Oh my goodness. I think that's a new one that I've heard. I know that was really common before with Blackberries and things like that, but I don't know that I would be able to survive that way. So we'll be sure to link to everything we talked about today in the show notes. But my last question for you is, do you have any final thoughts you'd like to share or asks of our listeners?
This is something my father told me years ago. And his advice was always be open to trying out new things. It doesn't matter whether that's at work or at home, whether you're out having dinner, it doesn't matter what you're doing. Always have an open mind and be prepared to try something new, because you never know what you might like.
Well, thank you again, Stuart, for being on the show. Stay well, and thanks to all of our listeners today for tuning into the CUInsight Network. We'll be back again next time.